friends, this is ACC Amit Kumar and we'll discuss IS-34 interim reporting. Now IS-34 is introduced by ISB for entities or the jurisdictions which use interim reporting. They require interim reports to be published quarterly or 6 monthly. So ISB says that if you are producing interim reports or if you are publishing your interim reports, you need to refer to IS-34 interim reporting. Now this standard is not mandatory. Only if someone is doing so, they should refer to this standard. If an entity or a jurisdiction doesn't demand interim reports, then this standard is not applicable to them. So it is not mandatory. It is depending on the jurisdiction, whether they require it or not. Now interim reports are published 6 monthly or 3 monthly. Now if we ask these entities to give all the information which they are giving in the annual financial statement published, it will be very difficult for them to provide all the disclosures which they are giving as part of IS-1 presentation of financial statements, full disclosures. So IS-34 says that you can give condensed set of financial statements. Condensed set means that you can give some disclosures as required by the standard, but may not give complete set of financial statements. But there is a choice that if still any entity wishes to give full set of financial statements every quarter or every 6 months, they are free to do so. But in that scenario, they'll have to refer to IS-1 presentation of financial statements for publishing their interim reports because they plan to give full set of financial statements. If an entity decides to give condensed set of financial statements, they can refer to IS-34. Now in the condensed set, obviously we'll be presenting the balance sheet, we'll be presenting the income statement, we'll be presenting statement of changes in equity, we'll be presenting cash flow statement and notes to accounts. So in the notes to accounts, there is a term known as selected explanatory notes which are published along with the interim reports. As far as comparison is concerned, now the question arises if I'm producing or publishing an interim report of 1st July, beginning from 1st July or July, August, September, how will I present my comparatives for it? So the confusion is only in that area that what will be the comparatives which will be presented along with the interim reports. So we'll have a look at it. So objective is to give timely and reliable interim financial reporting information about what happened after the balance sheet date. The user should know what happened after the balance sheet date in the next 3 months. So they are given the information regarding the financial performance, position and cash flow after the annual period is over. So IS-34 prescribes minimum content requirement in interim report. Minimum means this, at least this should be present. Principles for recognition and measurement in complete or condensed set. Condensed means if you are following IS-34, complete means you are following IS-1. So IS-34 doesn't mandate which entity should be required to publish. The standard applies if an entity does so. Entities whose debt or equity securities are traded are often required to publish interim financial statements by government, securities regulators, stock exchange or accountancy bodies. So that's a general norm around the world that mostly they are expected to publish interim reports. So ISB encourages public traded entities to provide interim reports at least as of the end of the first half of their financial year. That if they are not publishing quarterly interim reports, at least they should give once in the middle of the year in the middle of the year, at least after 6 months, at least they should give one report. To make their interim reports available not later than 60 days after the end of the interim period. Because if they do so, the interim period is ending on 30th September and they are providing this information in January, it's of no use. A timely and reliable information is only of use for the users of financial statements. So it should ensure that they are providing this information within 60 days of the end of the interim period. Interim period is a period shorter than the full financial year. Full financial year runs from, in India, it runs from 1st April to 31st March. We have quarterly reports which runs for 3 months. So that 3-month period or 6-month period can be considered as an interim period. Interim financial report contains either a complete set or a condensed set of financial statements. That's a choice given by IS-34. The intention is to provide an update on what happened after the last balance sheet was published. And it focuses on new activities, events or circumstances and does not duplicate information previously reported. So if you remember IS-10 events after the reporting date, there were some events which were adjusting and there were some events which are non-adjusting. Adjusting were already adjusted as part of the balance sheet which we published last year. Non-adjusting events is the new information which will be coming in these interim reports. So we either choose complete set of financial statements or either we choose condensed set. If someone chooses complete set, they simply need to refer IAS 1 presentation of financial statements. If they choose condensed set of financial statements and selected explanatory notes, they continue to abide by the principles of IAS 34 interim reports. So the minimum content for an interim report is a condensed set of financial position, condensed statement of comprehensive income, either a single statement or two statements depending on what is your policy earlier, a condensed statement of changes in equity, condensed cash flow, and selected explanatory notes. We'll use the same headings and subtotals which we have used in the most recent annual financial statement published. In India's case, which is the most recent annual financial statement published, this is year 2019, which is the most recent annual financial statement published in India? Which is the most recent annual financial statement published? We are in November 2019. If I ask you this statement, which is the most recent annual financial statement published, was of which date in India?
31st March.
31st March 2019 is the most recent annual financial statement published. There may have been interim reports published in the middle, but they are not considered to be annual financial statement published. This line is important. This will be useful. Interim report on consolidated basis. If entities' most recent annual financial statements are consolidated financial statements, then we also need to publish consolidated statements even in our interim reports. Additional line items can be included if they were included in the recent period. If there are new items purchased which were not forming part of the previous balance sheet, we can use them. Selected explanatory notes means it says that we need to use the same accounting policies and methods which we used in the most recent annual financial statement published. If there is any change in estimates, we'll apply the effect prospectively. Seasonality or cyclicality of interim operations. So we compare it with the same season. Like if we are publishing an interim report of October to December, we should give a comparative of October to December for the income statements to make people aware that in this season why the revenues are less or why the revenues are more. Because if someone is selling ice cream, definitely their revenues in winters will be less. Revenues in summers will be high. So it makes sense to compare it with the same season. Unusual items, if there exist, we need to disclose them. Issuance, repurchases, or repayments of debt and securities after the end of the reporting, after the end of the balance sheet period, after the annual statement has been published, any change which has taken place, any change in contingent liabilities which turned out to be liabilities or provisions, any dividends paid, segment information, subsequent material events, changes in composition. So these are selected explanatory notes which we should focus on while providing a condensed set of financial statements. So information shall normally be reported on a year-to-date basis. Year-to-date basis, if you are presenting income statement, it is for beginning from one period to another year-to-date. So we'll be presenting two sets for income statement. One interim report, one year-to-date. I'll discuss about it. What does it mean? Now we need to present statement of financial position. Suppose we are publishing quarterly interim reports and we need to report for the second quarter. Which is the most recent annual financial statement published? That is of 31st March 2019 in India. As I said, we are in the second quarter. Which will be the balance sheet in the second quarter? Interim statement of financial position will be of as on which date? Which date? If we are in the second quarter in India, which balance sheet we publish in the second quarter? End of second quarter. Hello. April, May, June, July, August, September. 30th September 2019 is the second interim report published on. Now, as per IAS 1 or as per IAS 34, we also need to give comparative. This is current. For comparative, which is the balance sheet we are going to present for it? For comparative. Which will be the comparative? Which balance sheet which we should present as comparative balance sheet along with it? Most of you may be thinking that it should be 30th September 2018. The standard says that there's an improvement in position from 31st March to 30th September. So we should give comparison of the most recent annual financial statement published. So the comparative will be most recent annual balance sheet, that is of 31st March. If you still wish to give 30th September balance sheet, you can do so. No one stops you from doing so. But this is the minimum requirement as per IAS 34. Maximum is a choice. If you still wish to publish one more balance sheet of 30th September 18, you can do so. No one stops you from doing so. This is the case of statement of financial position. Now comes statement of P&L and other comprehensive income. We have to give current year and also comparative. What will be the current year P&L if we are in the second interim period? Current year interim period. It will be beginning from 1st July 2019 to 30th September 2019. Got it? Interim period. What will be the comparative? Comparative for this. You need to cooperate a little bit with me. You can unmute and speak. What will be the comparative for it? Comparative will be 1st July 2018 to 30th September 2018. Along with it, see, P&L and income statement belongs to a period. And we try to show the performance during the period. Balance sheet is of a particular date. So when it is of a particular date, we try to compare the position from one date to another. It doesn't make any sense to compare 30th September 18 balance sheet with 30th September 19 when we have already published annual statement on 31st March. Period, we need to match it with the period because there is a seasonality and cyclicality of operations. We do well in certain seasons. So there is a difference in presenting a balance sheet and presenting an income statement. Balance sheet, for balance sheet, it doesn't matter whether it is winters or summers, but for income statement, it does matter. So another requirement is year-to-date basis. We also need to publish year-to-date basis period as well. Year-to-date basis means our year ended on the 31st of March. So from 1st April 2019 to 30th September 2019. We also need to present this. For income statement and for comparative, we need to give the same year-to-date comparative of the previous year. 1st April 2019 to 30th September 2019. Hope this is clear with everyone. This is the requirement of IAS 34. So for income statement, you need to give year-to-date basis as well as current interim period and comparative of the same season last year. Statement of changes in equity and cash flows. Now this doesn't have any relationship with the period, so what we'll do? With the season, I mean. Changes in equity and cash flows. current year, comparative. Now for changes in equity and cash flows, if we need to simply present year-to-date basis changes in equity, and for comparative year-to-date basis cash flow. This is the requirement of IS-34, that if you're presenting a balance sheet, give the balance sheet of the interim period end, give a comparative of the most recent annual financial statement published. If you're presenting income statement, you need to publish the current interim period as well as comparative. You need to also present year-to-date basis period as well as comparative. For changes in equity and cash flows, we simply need to give year-to-date basis current period and comparative for changes in equity and cash flows. And notes, we have already discussed selected explanatory notes. Hope this is clear. Prachi, Hema, Sapna, Birpal. Hope this is clear. Any doubt in this? Because this is the crux of this standard. If you understand this, the job is done. If there is any doubt, please tell. If there is no doubt, please give a confirmation. Birpal.
Amit, in line number 289, won't it be 1st April 18 till 30th September 18?
This one?
Yeah. Even up 289, line number.
Yes, obviously. So this I keep sometimes for checking presence of mind. That are you with me or not? So thanks for correcting. And thanks for correcting this as well. Because I copied it, but I didn't change the dates. So be careful. In my thoughts, it was previous period, but on paper, it was the same. Hope the concept is clear. Sapna? So what we need to present, at least information is clear. That which all statements we need to publish. So here's the same example, that financial year ending 31st March 2010, statement of financial position will be of, if it is a 6-month ending, if it is a 6-month ending 30th September, then 30th September is the date of balance sheet. Most recent annual financial statement will be of 31st March. Statement of financial position, if it is 3-month ending balance sheet, then 31st March and 30th September. If we are in the second period, this is the example we took now. If it is a 3-month ending, then the second interim period will be of 30th September and most recent will be 31st March 2010. For balance sheet, for income statement, it will be first interim period. If it is 6 months, current and cumulative will be same. If it is second interim period, then current and cumulatively or year to date will be different. Current will be from 1st July to 30th September, that is second interim period, and year to date from 1st April to 30th September, comparative of the same period of the previous year. For the income statement, for changes in equity and cash flows, it will be only year to date, that is cumulative till date and comparative. If it is 6 monthly, same period. If it is 3 monthly, cumulative to date. So there is no change whether we are presenting three monthly, whether we are in the second quarter. Even if you are presenting 3 monthly in the second quarter and 6 monthly, it remains the same. Even after 9 months, this will be from 1st April to 31st December. And comparative 1st April to 31st December of the current year and the previous year. So we'll use the same principles which we use for annual financial statements published. We'll make them year-to-date basis, the period, apply principles in same way as we did at the end of the year. May change estimates if there is any change. Because estimates are done prospectively. And do not restate prior periods because that's not required. Estimates are always revised prospectively. Revenues recognized in accordance with recognition and measurement principles. Do not anticipate or defer. We do not have to anticipate that we may get this revenue, so we recognize in advance, or will not defer it simply because we want to recognize it in the second interim period. We'll recognize it when it meets the principles of IFRS 15 revenue. Internally developed intangibles, IAS 34 says that apply IAS 8, do not defer in early interim period in the hope that criteria will be met in later interim period. If it meets the criteria, recognize it immediately. Recognition criteria are for capitalization are technical feasibility, intention to complete, use or sell, measure expenditure, educate resources, you have ability to sell. You know that you're going to receive future economic benefits out of it, you can capitalize the asset. Use tax rates that apply to expected taxable profit for the year. So whatever the rates are applicable, we'll be applying it. And re-estimate if there is a new tax rate for creating your provisions of tax, and even for deferred taxes if we are creating, if there is any change. IAS 8 prior period adjustment with restatement of comparatives. Use same policy throughout the financial year. Whatever the policy is for IAS 8, if there is any change in accounting policy or error, we'll have to restate. Definitely by retrospective application, if there is any change, any estimate, we'll apply the effect prospectively. Inventories, full stock taking and valuation procedures may not be required because this may be time consuming. So you can use estimated methods, estimates based on sales margin, or using representative samples. You can stock your inventories. Valuation of the closing stock at the end of the interim period. Provisions, estimate and interim rates may entail a simple updating of the prior annual provision. Revaluations, we may not enter into full revaluation. May rely on professionally qualified valuers at the end of the reporting periods, though not at the end of each reporting period, because that will be cumbersome, as well as it will require a cost, additional cost for the entity to get this done. So they may not do so. So they can rely on the existing values and can extrapolate and inflate, can make a judgment and can adjust or keep them same. Because revaluation is not necessary to be done at the end of even each year. So every interim report, I don't think it will be necessary. This is all for IAS 34 interim period. Thank you. If you have any queries, please ask.